In this section, we're going to talk about one of the most important pieces in trading, the OHLC bar and the Japanese candlestick. This is very important because most of your trading decisions will be based on the movements of these bars. In your career as a trader, you will definitely develop the proclivity to one type of bar. I, on the other hand, personally like the Japanese candlestick. After this lesson, you can very well choose the one to your liking. The OHLC bar and Japanese candlesticks are both types of financial charts that can show the increasing or decreasing prices of an asset. They can both be applied in any time frame, and depending on the platform that you use, you can assign the colors of the bars and candlesticks according to your preferences. Let's talk about the OHLC bar first. An OHLC chart is a type of bar chart that shows open, high, low, and closing prices for each period. OHLC charts are useful since they show the four major data points over a period, with the closing price being considered the most important by many traders. OHLC bars consist of a vertical line and two short horizontal lines, extending to the left and right of the horizontal line. The horizontal line extending to the left represents the opening price for the period, while the horizontal line extending to the right represents the closing price for the period. The height of the vertical line represents the intraday range for the period, with the high being the period's high and the low of the vertical line being the period's low. The entire structure is called a price bar. When the price rises over a period, the right horizontal line will be above the left horizontal line. Since the close price is higher than the open price, these bars are typically colored green. Traders call it a bullish bar. When the price falls over a period, the right horizontal line will be below the left horizontal line. Since the close price is lower than the open price, these bars are typically colored red. Traders call it a bearish bar. In reality, you can assign any color to your bullish or bearish bar based on your preferences. OHLC charts can be applied to any time frame. If applied to a 5-minute chart, it will show the open, high, low, and close price for each 5-minute period. If applied to a daily chart, it will show the open, high, low, and close price for each day. There are several different techniques that technical analysts use to interpret OHLC charts. Here are several examples. Vertical height. The vertical height of an OHLC bar is indicative of the volatility during the period. If the line height is great, then traders know that there's a lot of volatility and indecision in the market. If the open and close are close together, it shows indecision since the price couldn't make much progress in either direction. If the close is well above or below the open, it shows that there was strong selling or buying during the period. Bar color. Typically during an uptrend, more bars will be colored green than red. During a downtrend, more red bars than green bars are common. This can provide information on the trend direction and its strength. A series of large green bars at a glance shows strong upward movement. While more analysis is necessary, this information may be helpful when deciding whether to look into further details. Now, it's time to look into the next type of chart, the Japanese candlestick charts. Candlestick charts originated in Japan over 100 years before the West developed the OHLC bar. In the 1700s, a Japanese man named Homa discovered that while there was a link between price and the supply and demand of rice, the markets were strongly influenced by the emotions of traders. Candlesticks show that emotion by visually representing the size of price moves with different colors. Traders use the candlesticks to make trading decisions based on regularly occurring patterns that help forecast the short-term direction of the price. Like the OHLC bars, the candlestick can be used in any time frame. Candlesticks are useful when trading as they show 4 price points: open, close, high, and low, throughout the period of time the trader specifies. Many algorithms are based on the same price information shown in candlestick charts. Trading is often dictated by emotion, which can be read in candlestick charts. Just like an OHLC bar, the Japanese candlestick shows the market's open, high, low, and close price for the day. The candlestick has a white part, which is called the real body. This real body represents the price range between the open and close of that day's trading. When the body is red, it means the close was lower than the open. If the real body is green, it means the close was higher than the open. Traders can alter these colors in their trading platforms. Bar charts and candlestick charts show the same information, just in a different way. Candlestick charts are more visual due to the color coding of the price bars and the thicker real bodies, which are better at highlighting the difference between the open and the close. You may have heard about candlestick patterns. Candlestick patterns are created by up and down movements in the price. While these price movements sometimes appear random, at other times they form patterns that traders use for analysis or trading purposes. There are many candlestick patterns. Patterns are separated into bullish and bearish. Bullish patterns indicate that the price is likely to rise, while bearish patterns indicate that the price is likely to fall. No pattern works all the time, as candlestick patterns represent tendencies in price movement, but not guarantees. We will discuss about these candlestick patterns more in future lessons. The bottom line: as Japanese rice traders discovered centuries ago, investors' emotions surrounding the trading of an asset have a major impact on the asset's movement. Candlesticks help traders to gauge the emotions surrounding a currency pair, stock, or other assets, helping them make better predictions about where that asset might be headed. In the end, as a trader, you have to make the decision on whether you want to use OHLC bars or Japanese candlesticks in your trading. The choice is yours and yours alone. I hope that you have learned a lot from this, and I look forward to seeing you in the next video.